Hey everybody, welcome to Daily Update for Sol and BTC. So we're heading into weekly close, one day after monthly close. I guess a little bit of a summary of monthly close is that we ended up shifting some trends to the downside, which gave us some support to bounce off, but we did end up closing underneath key levels. So closing, not hard closing in most cases, which means they can be recovered if we have continuous bullish momentum and things change. But realistically, we know we've got lower targets in place. We've probably now just got the ability to have yet again another bounce before we go to the absolute lows. Liquidity's just been taken by sort of the end of those 9 o'clock algos. So we're now looking a little bit more to the upside on the daily. We've just hit some levels that could create some little bounces. So that's pretty much what we're looking at. 7-day liquidity is actually starting to even out a little, which is good if we want to get a bit of a wider range happening. So that means we could have a little bit of a higher pump, we could have a little bit of a lower low. And we are seeing today some more structural closes which point various different confluences with heading into that 76 at the top end and heading to that 56 at the bottom end. So we'll get into all that. Let's have a look at these charts. Okay, so as you can see, we had a prime day yesterday, a whole heap of closes today, and then we have a prime day tomorrow. Now, I don't know what's going to happen tomorrow because it's one of those interesting times when we have a prime day on the native exchange closes as well as on the TradingView closes. So we could expect something pretty spectacular, or maybe nothing. But whatever happens tomorrow, it doesn't change any high time frame structure. So it's a great time to just absolutely nuke the market or send it up. Because you're not going to have any close tomorrow that actually has a long-term effect. So if you want a liquidity grab, tomorrow's the time to do it. And it doesn't just it's not just tomorrow, because there's only a one-day close tomorrow, so very quickly and easily undone. But there's also then another 24 hours after that before you actually see any other high time frame closes. So yeah, we let's see if we have a bit of Elmo chaos. As far as the daily for Sol BTC, we might, if we close up, hard close the daily range there and break the trend. Big wick to the top side. So, realistically, that means when the trends move, we're still under that resistance. But it gives it the ability to have another sort of sweep and pump up into resistance. And because of what's coming tomorrow, like I say, anything over the top of any of these trends or resistances is only really having an effect on a daily scale. So we could also just, looking at it, end up bouncing from this really steep range trend, maybe all the way up to that really steep range trend up there in that higher 1364 sort of area. But yeah, we just don't know. As far as could we have a bearish close? Yeah, absolutely. Just pull back down. That's all it really has to do. Turn it into a blue candle, and then it's not breaking anything. We've got 2 hours to go, 2 hours and 18 minutes. So I guess it could have some pre-close pump, but yeah, we will see. The weekly is probably the one that's a little bit more important as far as the levels go. What we're looking for is a complete engulfment on the weekly. So if we can get a close over 12760, that's the first step in actually having some kind of range built to the upside. But ideally, we want to be up inside this origin that's running through here at 12780, and that then gives us a little bit more of a ability to push or bounce. So it is a hard close level to the downside. So it is resistance. You can see we've swept up through it during the week and we've pushed back down. But at the same time, we have things to go and do retests on that are hard close levels that we haven't retested. So there's a lot of reason for this to get back up inside there and try to go to the upside, and that's effectively all the relief rally actually is. So, but at the same time, there's nothing to stop us just opening the candle at a level like what you see now, and then we can just reject off the backside of the trend without really even traveling up that much, and then come back down to try and actually break this hold down again and come back down to the lower trends. So Yeah, it's in a pretty bad spot just right now with 2 hours to go. You can definitely see how they could open the next week candle, push up into this resistance, maybe get a bit of euphoria going on, maybe do some retests even of some upper levels. But looking at where it's coming from, the wrong side of two trends and the underside of an origin, the outcome by the end of next week is that it's either just back down here or it's down lower. So that's what we're looking at there on the weekly. Let's have a look at these safety assets. Okay, so on the daily, kind of just another horrible close if it closes like this. It's not actually breaking the support trend unless it's a blue candle. So we need to be at least under open, so that's 70.07. But you really want to be underneath this support, this little in-range origin support here, which is bang on 70%. So you want to be a blue candle under the support, breaking the trend. But if you do that, the size of this wick is so big that the trends just shift to the bottom and become support again. So really it's just another close that isn't really breaking down the top at this stage. And you can just see how indecisive this last couple of days have been. They're not breaking up, they're not breaking down, they're just holding. So that's all we're seeing there. Could it get really bearish? Yeah, it could. It could come back up above the range trends. We could pump up above any of these horizontal levels. I mean, any kind of close over 76.4 as an example would be a super bearish place to be starting tomorrow. And we could even engulf. So if you've watched these videos long enough, you can probably tell how frustrating this kind of price action is, where it's on the line, it's got 2 hours to go. They're just not showing their cards as to whether they want to break this thing up or down. And even if they do end up showing a breakdown in the safety assets, which you'd think is going to be another little alt run or another little pump in the alts, then they're just creating candles and structure that just allows them to do little fake outs and then reversals. It's all very very crappy price action, to be fair. Weekly being a little bit more important. We want to see if we can get an engulfment. You can see what happened, say, the last week. We get a little engulfment, you get a pump to the upside, but we end up coming back down because of the range resistance. Now, if we get a little engulfment in the other direction, we might open under one of these trends and above the other, which means we could get a little bit of a dip, but end up coming back up. Right? So it's all just kind of the same stuff as what's been happening really for the last 2 to 3 weeks now. Yep. So don't think anything else is really changing there. We're not breaking trends in either direction. So I guess what we're looking for is to get this engulfment below that 70.14. And we know that from a daily perspective, that still gives us the ability on the daily just to pump in the other direction anyway for the first day. So we could do a sweep to the upside, maybe a little bit of a dump, but we'd be pushing through the weekly resistance. So some point during that week, we're likely then to come back down. But we'd have the weekly support just sitting very close. So we still haven't done the retest of the 69 area down here, which if we can do the retest from the other side of the trends, we might actually be able to break it and then keep coming down, which could make a bit of sense because we haven't done the retest here. So we might just need a few more candles to actually get in a position where we could change direction better. Okay, let's have a look at the totals. So I posted on X that this was basically the crappiest place you could ever close a candle, right in there. And there's your pretty normal outcome. We've swept to the upside, swept to the downside. Now at this stage, it looks like we're going to take the road of the downside, but obviously that can change with 2 hours to go. So if we get any kind of close under this 196 or 1.96 trillion, then we're going to be safely creating a hold level on the underside of all of the trends that could pose as resistance. And at that point, we're going to have to basically reject those trends and head down to find some kind of support. So if we close above the 1.96 trillion, then we might not create the hold level, still be on top of the range trend, but underneath the support trend. So we could then end up with just another sort of pump and dump type scenario. And the only way this thing really becomes any form of positive, sustainable daily close would be if it actually totally flips, ends up up above all these trends, which then doesn't technically break them, but it gives it the ability tomorrow to actually do something. So that's all we're looking at there. Weekly. So this could get pretty nasty. Hard close. So we've bounced between the range levels. If it closes as a blue candle at all, then it's a hard close of the 2.02 trillion break level. And down where it is now, it's also on the wrong side of one of the support trends, but on the top side of the other. So you can see how we can end up just with another pump and dump type scenario from starting within these trends. If it moves up and closes, say, over 1.98 on the weekly, then it's probably going to just continue to have another fight between the trend and the hard close break level. And if it closes, of course, over 202, then you can be a little bit more bullish because it's just kind of creeping back up into those top side levels. But yeah, that's about it. Right, if we look at with a little bit more risk involved, so anything under 646.48 on the close gives us a hold. We're still underneath one of the range trends, but we could be on top of the other one. So, you know, once again, you might get a little bit of movement in the risk assets with this. So we could bounce off the top side of one of these range trends and then look to target the other. So that's it's really just a scalper's market, sideways chop scalper's market. Hold levels have all been tested. We've had the first touch bounce of the relocated trend. We've got a second touch bounce. We've had the first touch of the created origin. So really, there's not much left down there on the daily that hasn't already been tested. And of course, we're rejected off the top side. So yeah, trend's going to move. So we'll break that trend. It's going to come here. So as long as there is a chance that it can go up, this whole level that may get created today can break this new trend that moves. Alternatively, the trend can break the hold. So yeah, even if we do create the hold, we might get a little push to the downside and a bounce off the trend, but it is starting to become quite a tight compressed wedge, which hopefully means we get out of this area in the coming days or week. Yeah, and a little bit more bullish as well. So it's interesting that the riskier assets are a little bit more bullish than BTC right now with these closes. So this close, if it doesn't drop at all from here, will still be just above the trend, but it will be hard closing the origin above. So there's one of these two will have to break. So bullish would be if it gets above the 655 and trillion, and bearish if it goes below the 640. In the middle, it's a fight. You know, the next week will be a fight. Okay, let's have a look at SOL. Okay, so low time frame structure, we've created a little support level, bounced off it. There was a bit of a range trend running through there, so just looks like we're heading up on the low time frame for now as we lead into close. There's quite a bit of stuff to get through there in the next 2 hours if we want to have a decent close. So I've said that, seem to say this a lot. Doesn't look like we could have a really substantially decent close. We are, because we've probably bounced off that 5-day hold we created the other day. It's just talking in the Discord this morning. It did hit on some exchanges, and on other ones it missed by about 3 or 4 cents. So we might be running up off that, which means we could be heading up here to this 84 area. So that's looking at the 1 hour, move the trend. Now we didn't actually touch the trend, so it's bouncing. We've got the hold up there, 83. So we can still reach. We've got 2 hours to go after this candle. If this does a little bit of an engulfment, somewhere around that 83.2, if it can do that little push, then we might be able to continue up. But we can actually hit. We can get to the 84. And what have we got up here? 85, dirty origin. Went above, came down, so still technically an origin. And we've got that hold level there at 83. So what we need is either this candle, which would need a bit of a push, or the next candle needs to sort of close up inside this hold, and then we could bounce up and maybe get to the 84, 85 by the end of the day. Just get that. What do we got on the last? So the last 4-hour candle of the day, it's going to run into resistance around 83, or backside of trends around 84. Hold level up there starts at 84.4, and it's finally done a retest of that hard close broken level. So this is, if you've heard me long enough now, you always hear me harp on about how when we leave break levels behind, we do these hard closes up high like this. Typically you're going to get price coming back, so it's pretty high probability, and there it goes. So this last candle, now that it's actually done the retest of this break level, may push up into the hold level, which is designed to stop it. And yeah, so I wouldn't really be expecting it to get past about the 84.3 to 85 area before close. But that does make a bit of a difference. If we can close up there, is a lot better than closing below at the moment. You don't want to be closing below things like 80 or 82 at the moment. Okay, right, let's have a look at the daily. Yep, so the daily opened in that horrible, lovely spot, did the wick to the upside, hit the daily origin. I really was hoping we would actually get up into somewhere in these 90s. Actually, there's a level around 91.2, or I think it's 91.195 that exists, that I really want to see what happens when we get to that. It's one of these levels we've been studying on in all the data sets. But at this stage, this is not a really bad daily close from the perspective that it'll actually shift the support trend. And it's quite a flat support trend, so it's the type of support trend that is quite easy for the candle to bounce off. And at this price, it does open just above the resistance trend. So if we do continue up, let's say the 5-day hold plays out and we continue up into the 84, like even just that $1 difference, and we close up around there, then we are above the daily range trend. We are above the daily resistance trend. We technically would be, let's see, depending on exactly how it closes, if it closes just in the lower part of the 84s, like 84 flat or anything below 84.291 is going to be a blue candle shift trend. Anything above 84.291 is going to be a yellow candle, which means we're not going to relocate the support trend. So you almost want it to just be right on that line when it closes. Move the support trends, be above the other resistance trends, and give it a reason to move. Expand the range a little bit and give us another bounce. Of course, anything can happen by close. If they bring it down and close under yesterday's daily candle, so some kind of close under that 81.8, then that's very bearish. So we don't want to see that. Even under the 82.194 range level becomes quite bearish. So yeah, that's our daily close. What about weekly? Well, weekly is still above trend. As you can see, it's having a bit of a fight between re-entering the actual distribution range. So this is the, if you fib this candle up here, which is the topmost fully engulfed candle. There are other ranges, like there'd be one based off this candle as well, but one based off this candle. But this is kind of the most current fully engulfed range. So if you fib this one up here, what's happening is we've got this level 4, which is effectively weekly resistance. We've got a prior broken trend above it, which is weekly resistance. And then we've got these levels that it wants to retest that come all the way up here. And then we've got the trend. And the trend wants to break the horizontal. So that is what a wedge is. If you're new to trading, you'll see all these people talking about flags and wedges and stuff like that. So it's all just horizontals versus diagonals. Now, if we can close over 84.697, that's real bullish intention, because all of the lower time frame stuff is really trying to stop that from happening. But if it does happen, so if we get above that on the weekly, then we've got the opposite wedge, which is the diagonal resistance at the top, and the horizontal, what then is trying to flip into support at the bottom. And that's when you start trying to break trends. So at this stage, we need, for this to be like a super bullish close, if this was bull market price action, the price would be going up and closing over 87.6, or even 86.1, creating a hold. The hold could then keep price sideways to break the trends and then continue on to do the retests. If it closes like this, a dead flat weekly doji candle, it's just horrible. Horrible price structure that doesn't really tell you what they want. It doesn't break the level above, it doesn't break the level below. It just means that you've really got to wait another week before there's any clear signs of what side is really going to break. And it gives them the ability just to continue to sweep liquidity top side and bottom side, and then return back to being in the middle of support and resistance, which is what we have had. And this is the kind of thing you could have predicted last week. If we close here and here, the chances of us just ending up dead flat in the middle like this, really high. So yeah, we really want to close up over there. That shows a sign that they're going to start a bit of a rally. And of course, if we can get a close under that trend, which is 80.5 roughly, is where it's sitting as of next candle. If we can close under 80.5, then they're showing us intention that they just want to dump it next week. So that's where we're at. There is also just something we're studying a lot at the moment, and we're just waiting on data for it, which is about the probability of retraces back to the third level of distribution, which are really, really, really high, from everything we can see. So it'll be interesting to see if they do bring this up and start to work their way up there, because from a price action perspective, all that we'll be doing is retesting all these broken levels. So if we look at the descriptions here, so broken, untested, broken, untested, broken, untested, broken, untested. So the probability of broken ranges getting retested is really high. It's the same as the break levels getting retested to the downside when the price runs up too fast. When the price runs down too fast, it quite often comes up and does these retests. So there's a bit of confluence with, if this moves between this level and this level, it maybe goes up a little bit higher above it over time, it could be over several weeks or whatever. But if it does that between here and here, it's also doing all these high probability retests. And that is maybe that little rally we get. I think if BTC went to 76k, then it's quite likely you could see Sol coming and doing all these retests. Okay. And as you can see from the monthly, just recapping on the monthly, we closed under the horizontal levels and we shifted the trend. So we now have this really big range, and say if it was a very bearish range, what it would be is it would be first rejection like what you're seeing now. That's quite bearish. First support would be down here. If it was a trappy bullish range, then you could do retests all the way up into these levels, which is pretty confluent, with what you've just seen on the weekly levels that need retesting. But coming from the underside, a month of this, everyone very euphoric, still can lead to this. Okay, so that's why the close of the month was quite important. It's either just we're not interested in going up yet because we can always do these retests as we cycle up later, and they're either going to come down, and that's your new wedge, or we can go up, then come down. And the next month, if you close under here, wedge reverses. So, right, let's have a look at some of this bigger stuff. So just looking at the basic data for Sol, it looks like we rejected up and around the first touch of the daily origin. And this is inactive because there hasn't been a refresh done on this. It's still in beta, so every time we want to refresh, I've got to poke the devs. I think they're asleep. So, but it looks like we've probably bounced off this area down here. Yesterday's trade was actually a bounce or a move up, I think, on the BTC 5-day, and as well as the ARC trade and a few others. But this level is the one we've been discussing in Discord at the moment, where some exchanges hit it perfectly and others seem to be a couple of cents. I think BitGet got 81.636, it might be. So still don't know. It may go back down and then hit it again, but that's kind of where we're bouncing between. And so if we look at some of the bigger closes that are happening, wait for this to load. Dun, dun, dun. Okay, so looking at things like the 5-week close, we're below and miles away from the next sort of support trends, which have confluence with, say, coming down maybe over the next 10 weeks and then hitting these lower levels down around that 47. I mean, it may go faster. We've got untested ranges down here at 26, so these are all the real sort of possible bear lows down here. But we've also got hard closes of things like these 120 areas. So because we're not actually breaking this trend today, what we could do is potentially come back up to actually do a retest of these hard close levels. That would be the most bullish thing that could possibly happen. It's not a guarantee. We can just reject off the backside of the trend and we can come back down. I mean, when you're in something like a bullish market and you close below a trend, you quite often go back up, like what you see there. Then you lose it again and you have your dump. When you're in a bearish market, quite often the first resistance is the resistance. It's the one that you actually end up bouncing off. But even here, as you can see, we didn't technically break the trend until we broke it here. When we broke it here, the first thing that happened is we went up here and we did a retest, and then we dumped. So, if we find out where our current 5-week trend is, which is not this one, and this is obviously what you then start to see in things like a bearish market, is we break the trend here, and then we come up here and we reject off the first horizontal resistance and we come down. Okay, so that's the difference between when you're in sort of a bullish market and they want to push price up versus a bearish market where this first resistance, we don't even do a retest of the trend, we just drop. And same sort of thing here, we just bring the candle just underneath the first resistance. Hell, that was a pump. Whatever just happened on BTC just... Wow. scam candle. That was awesome. What's going on? Nice. Anyway, live on video, everyone. Let's just bring this across. Look at that. Lovely little scam wick straight to the upside. Straight through. Something happened. People started shorting too early. Right. So back to this. So in a bearish market, you can just come back up to levels like this 95, reject off that, never go back up. In a bullish market, you're going to go through and you're going to retest the trend or try to grab some more liquidity. So the trend that we are technically breaking is this one here to the upside, which is sitting around 130 in the next 5-week candle, 130 or above. And the bearish rejections could be anything from 95, 105, 120. So anything like that could be the more bearish rejections. Okay, kind of want to know what that spike was all about now. Right, let's have a look at this. What are we on? Natives. Let's look at non-natives. So it's got big closes today. Big closes. Kind of waiting for someone on the Discord. It's up on my top left monitor, so I'm sure someone's going to post something in a second. Right. Seems around, push back. Oosh. Okay, so we've got our 8-week trend break today. So the 7-month trend yesterday, I posted some stuff on X about it. I'm pretty sure it closed just above the trend, which is why we had that sudden pump yesterday. This 8-week, as an example, is definitely closing and breaking the trend, moving the trend, and it then gives the ability to bounce. Like, it's a really wide range, so we could have where do we need to close? We probably don't want to close below that hold, so if we can get up above 85 today, 85, 86, that means we're definitely above this hold, and we've got a trend in a better spot. We could have a dump into the trend and then, yeah, a push up from the trend. So that's definitely got the ability to have some kind of rally. I just don't know if it's ever going to happen. What do we got? We got a break level here that we need to stay inside. So that's 78.942. You remember that number from previous videos. It's a pretty important number. We're creating a reverse hold, which is going to be up around 112. So that's potential resistance. We're creating a range, and we're closing below another break level, which is that 95.234. So even if we just get a move up to 95.234, that ticks a lot of boxes as far as some of the outstanding retests. And let's see what this range is doing. And 100.174 would fall into the category of retesting that 3.618 level. So yeah, there's a bit of hopium going on there that we could be creating structure. Trend is miles away, unfortunately. Let's see if we're moving trend today. Looks like we are. Yep. So we're breaking moving trend today. Yeah, we've definitely got all the structure for a rally. It's just, do they rally to the first resistance or do they go higher? That's about all we can say at this stage. Go on 4 weeks. Yep, so potentially closing below key levels. Really want to stay above 82,920, and that could then lead to 94. And just got to watch out for that reverse hold. Where's that? Well, actually, that's up around 100 and something, so that's probably not such a big deal. So, yeah, the wicks are really good on the bottom of these candles. Just nice upwards momentum. So any trends that are shifting today, they're shifting with a reasonable amount of range. Yeah, there we go. So that's actually bouncing anyway off an existing, very old 4-week trend. So yeah, this can rally. If we stay over that range level on the 4-week, then 93.141 becomes the break. 93.163. This area here, the 93.2 that I mentioned right at the start, or the 93.195 area, is an area that's got confluence or singular confluence. So it'll be really interesting to see what happens when we get to that, because that could be it. It's more or less, it is the first point of rejection that could happen if the price starts to rally now from this level. And that's, yeah, without even looking at charts, it's just in the data. So that would be the area that I'd be quite interested to see how price reacts. And if we get through that, the thing about it is it's a daily level, and it's just purely a daily level. So if we spend one day above that level, we then reverse that level, and these singular levels that we're finding on the charts here, they're things like, they are the levels like these ones down here where you just got over the top of it, retested it, massive pump. So that they seem to be the ones where there's a huge amount of polarity, and it can change very quickly because there's no other levels associated with it from a time frame perspective. So we are definitely, it'll be interesting to see what happens if we get to that. But hey, let's not get ahead of ourselves. We're not there yet. Okay. So I'd say most of this other big stuff's probably just going to be telling a very similar story. Yeah, this is 20 days closing inside the break. If you can get an 84 close, then you're moving back up inside a range level. So it's really not looking too bad as long as they don't troll it in the next hour and a half. There's clearly something going on. The computer fans are going nuts. High frequency algos are trying to shove the price somewhere. Yeah, range levels around 84, so we just kind of want to be over 84, but we're still inside the break levels. 2 weeks. Yeah. Hard closing break levels at 95 and 100. Holding trend. Technically creating a slight uptrend because we bounced the trend, came up, didn't distribute back to it. We got close, but not quite. So that's quite bullish. Holding this break level. It's not converted to an origin yet, but it only takes 2 weeks more to the upside without retouching the lows. So this is kind of future polarity levels like 70, 79. where are we? 78.942. Surprise, surprise. So if we go back to 78.942 in the next 2 weeks, then they are choosing not to convert this to a 2-week origin level. If we don't go back there in the next 2 weeks, then they're choosing to make this into stronger support. Very similar to the fact that they haven't gone back to this trend. So it's looking like there is potential reversal from here. Okay. All right. Probably don't really need to go through too many of these others. Let's have a look at BTC. Okay, so looking at BTC on the 1 hour, it's funny, I always say that news is just an accelerator of price. And as you can see, we just went on that lovely big pump to the upside, $1,000 move. And what was it really? Well, it was a $1,000 move from above a trend, below a trend, into a break level, into a range level, and now we've just pulled back down to where the resistance is. So, it happened really quickly because of whatever announcement probably just happened somewhere, but it just did what price does, at the end of the day. Okay, so, and of course that also meant we ran into that 4-hour hold level. So if we close down now, we will be shifting this trend interior. We just don't want a long wick. And if we close up, we're not really helping ourselves all that much because we'd end up creating another resistance trend, which we'd have to get through. So yeah, it's it really needs to be up much higher. So get up through all these trends. We almost just needed that pump to just be the last minute of the day and get us all the way up here to 66.8 and then magically open the next candle, and then it could have gone up from there. But at this stage, it just looks like they shot the news off a bit too early. So yeah, we might even end up closing below the break level on the 4-hour, which could be break level here. So that could be a little bit bearish if we close under that 65.987. Okay. And then we end up moving that trend. And then we have our wedge. And we need to break out of that. Okay, about daily. So daily close started from under the trend, pushed up to grab the liquidity, it's come back down. It's bullish intention would be if they push it up over that 65.831 and do not create a hold level here. If they do close below that 65.831, then that's kind of bearish intention, and it's creating a hold level to try to go to the downside. It's not going to move the trend today, so the next trend it could target would be basically all the way back down to the lows again. So that's just something to watch for. And we're still holding the range level as the horizontal, so your wedge is basically the hold or this range level, and that's going to be something like this, which it's got to either break up or down the next day. Let's have a look at the weekly. Yeah, so the weekly is sitting in a pretty bearish position with an hour and a half to go. If it can close back up over that 67463.8, then that becomes definitely a bit of a bullish flip for the weekly close. If it closes where it is now, which is or anything less than about 66k, then it's going to be opening on the wrong side of that weekly support trend. When it's done the retests of the prior levels, the next real major support, if it passes through the next layer of the trend, is all the way down here at about 54, 55. So just keep that in mind. there is a bit of a hold level sitting there at 57, and there'd be some refined entries inside that on the weekly. So, 56 is still a number that appears a lot of places. Right, so bullish close, we want to see 67,463.8 come out of nowhere. That'd be great. Bearish close, anything under 66. Anything in between these 2 points just creates another fight for another week. Recap of the monthly. So monthly did get back above that 64,996 break level from the previous all-time high. So that was kind of sneaky bullish. It shifted the trend to the lower side. And of course, the resistance if this bounces, which is kind of what you'd expect it to do, take a bit of a bounce off this 64.996 level. In fact, oh no, we got to about 65. We got within $50 of this. So bouncing from this level all the way up to the 74 level is very possible. And I think overall the bigger range is very easily illustrated here. It's just 55 here and 76 there. That's it. So how that happens over the next month or coming months, whether it's dipped down first and then up or whatever, it's kind of that's the broader range of distribution that's in play. And closing under or over those levels changes things. Okay, let's have a look at some of the bigger stuff. Okay, so this gives you a bit of a good idea about where we are with BTC. So we've bounced off the 62K, which is basically 5-week distribution. The next level for that's 37, 37.5. In between that, we've got break levels to retest around 48. We've got support break levels that need to be tested for whether they break or not, which are around 52. But we've also hit the trend. Now, when you hit the trend, you typically bounce. So if we just consider this move back here on the November the 17th, we hit the trend from the top side of support. We bounced up with this candle before coming back down. Now, what did that target? It actually targeted this hold. Right, so this hold level from back here in December was the first hold level that could hit. So that's bearish because it just went to basically the first resistance that it could find and then rejected off the first resistance, which was 101, and then continued on down. So what was it 101? Did I get that right? Sorry, it was 97, 97.284. So what we're doing now is we're potentially going to close above this trend, and they'd have to bring it down quite a bit. So it would have to close under 63.9 today. So that we're either going to see a real big dump in the next hour and a half to break these levels, and even then you've really got to get under the 62 level, although the way you would break the 62 level is actually to be on the wrong side of this trend and then use this trend's reverse to break the horizontal. So as long as they sort of stay over that 63 point today and don't do some really super big dump, then we should end up coming back up. Now they could, other thing would be to push it down below 63,981. That could create an interesting scenario because below 63,981 would be this really tight little space between trend support and the older hold here from May 2024. So that's another sort of really tricky thing to do. Kind of a perfect close, which then can lead to instant testing and breaking of another level. So kind of watch out for that. The other, so the other outcome, if we're going to get a rally, is they could close above these levels, and then your first resistance is basically 70K, 74K, and then retest of these higher levels or prior broken trend. So that's the big stuff. Let's have a look. See what else we got going on. Yeah, so it's all pretty confluent. The range is slightly wider here. Anything 62 can push up still. So I can definitely see why they're really having a go at it now. If they can just get it down a couple of $1,000s in the next hour, then they can have a very bearish close. Anything above that looks more like it's going to have another go to the upside. Right, see 8-week. Yeah, below that 69,145 still, so still you got to be pretty long-term bearish. It's more a case of do you think there's going to be a rally first? And breaking that trend. But still above this one. As long as they can't get us below 62 today. And if you're looking at just lower time frame liquidity at the moment, that sudden pump we had took out a lot of the close proximity shorts, and now we're in this bleed down. So if we look at this on BTC, pump up out of nowhere, down, down, down so far. We've got liquidity down here. All they have to do is get this thing cascading, take out the bullish longs, and if we end up closing down here, we create some very bearish high time frame closes today. And of course, if we hold this or we travel up higher, then we're more likely going to be coming up and taking this liquidity out to the top side. So that's it for BTC. Let's have a quick look at the others apart from, we won't bother with Tesla and MicroStrategy because it's still a weekend day. Let's have a look at ARK and maybe ZEUS, but I don't think ZEUS is doing much. Okay, so ARK, yesterday all of the high probability minimum obligation longs completed by the time we'd hit about 4.2 or 2.06 or something, completed all the ones that were in the spreadsheet. And beyond that, we're now looking to see if we just get a range retracement up to this 4908 level. So closing the day above 3376 means we're creeping back up inside the daily level 4. Sorry, there's heaps of stuff on here as you can see, but just get rid of all these. Get rid of all these drawings. We'll just put the daily range. So this is that big distribution range that got created. So closing inside this means we may be looking to come back to do this good old experimental move that we're tracking at the moment up to here. There's also a whole bunch of range levels which go all the way up to actually about actually they go all the way back up above here on higher time frames. I'll just see if I can find those for you. Okay, so what you probably see right now is just a ginormous spreadsheet with a whole bunch of numbers, but it's what you do with it. So if we take this, we turn on our filters, and then we come down here. We want to look for non-flipped holds, and then we want, they're all going to be entered because they're not flipped. We want ones that haven't completed. So this is out of date. So this is what we were working with the other day. And then these were our minimum obligation longs. So getting these entries down around these 24 cent plus, sorry, that's 2 cents, 2.8 cents, getting these really low entries on these high time frames to then take the longs back to these targets. That was basically what we were looking at doing. And I think we've completed, we may not have completed that one. Don't know if we quite got there. But we would have completed just about all of those by now. So they were all just minimum obligations. Then we've got range levels that exist inside there. So actually, I'll just put that back. So if we were looking for targets, we were looking for these as initial targets and relatively safe places to take profits, because these kind of moves, as you can tell by how many of these exist, so if we just expand that out again, there's 165 of these types of moves that have been created over time, and these are the only ones that haven't TP'd, and they were only created on the 27th, so they're not exactly very old, given that they're very high time frame. So that was our initial set of TPs. Then if you wanted to try and leave a bit of a moonbag running, then there would be other things you could look to target, which would be range levels. So to find those, we're looking for brackets that the candle opened in, and then whatever the top part of that is, which in this case, so this opened between these two levels here, and so you'd be looking at these as potential targets for moonbags. And then you'd look at the next bracket up, where did the candle open, and then you'd be looking at anything up to the top level of that, which is these. And then you also just want to make sure you don't have any holds that are possibly reversing, so that's going to be this one here, and you do, and so that's opened below this level, so that would be a potential TP target as well. So then you turn it all back on, okay, and then you'll be taking profits here definitely, because they are the high probability targets for these, and those are pretty good moves. You're talking 40-50% plus type moves, and then if you wanted to aim for higher levels, you'd be aiming for these, and that's basically all there is. You could also technically look at these ones and go, well, these have not completed their full range yet, so you could look at these, but that's now getting really moonbaggish, moonboyish, whatever you want to call it. So what we saw from that is entries down here, and how high did we go? We went to 4308. So we didn't quite hit that one there. So there's probably still a bit more pumpiness coming until we get to that. You could even look at trying to catch this on a bit of a retracement, because once it closes back inside the daily, it may retrace back to one of these lower levels in the new daily range. It may even retrace back to the fourth level of the daily distribution, and then it could bounce up. But it's a riskier trade to start taking this now than it was to obviously get the entry down here. So that's where that one's at. Now ZEUS. So ZEUS has the same potential structure, apart from it doesn't really have any decent support, because it's just broken all its supports as it's been going down. So there's no real minimum obligation high time frame moves left on ZEUS, because it's just been dying. What there are is there's a couple of breakout origin levels that are getting created to the top side. So we've got this 11772. We've got this that's a hold level on the weekly at 17540, and then we've got another weekly breakout level there at 21940. So we're at the very, very bottom of the high time frame distribution now, down here below 1 cent. And if this was to do some kind of rally or retracement, the next level of that is back up here. So this is definitely a high risk trade on something that looks like it's completely dead. But there is a bit of volume happening along the bottom. And if it starts to work up and break through these daily breakout levels, the weekly hold level and the weekly breakout level, then it may be on its way back up here. So keep an eye on that one. I haven't opened anything on this or bought any of this, so just keeping an eye on it, because at the end of the day, if there's an opportunity to get 1000% move, why not? So that's us. Hope you like and subscribe. It'd be good if we don't have some flash crash before end of day and just dump down, because it would be nice to get a bit of a rally. But yeah, at this stage, who knows? You know, I think if everyone wants a rally, the price is probably just going to keep going down. And yeah, it might have been on a live stream, or it might have been in one of the prior videos. I just talked about one of the range trends that we've got on BTC, which is just so steep. It's if they want to do a retest of it without basically a full round trip of the entire bull market, they really need to have this move fast to the downside so they can hit that trend before it gets too low. But I mean, they may never retest it, but it's just seems it's one theory as to why we're dumping so quickly this this market compared to prior. All right. Yeah, hopefully we'll see you in the Discord and catch you later. Cheers. Bye.